man, after a brief move to the upside, Bitcoin is back below its 4-hour EMA ribbon. And in this video, I'm going to share with you what needs to actually happen for a bull run to trigger. Loads of people are talking about the halving. Loads of people are talking about the spot Bitcoin ETF. But we have to understand, as a basic principle, what is it that Bitcoin is a play on? I'm going to reveal that and a lot more. Smash up the likes. Don't forget to subscribe. Yesterday, we got a really crazy 4-hourly candle. Loads of people getting excited. It was breaking above the 4-hourly EMA ribbon. Took us to 26.4, only to come crashing down about 8 or so hours later, back below the EMA ribbon. So we're back to where we were here on Bitcoin, sitting at the 25.9 level here. If I show you that on the daily chart, we are just running into our daily EMA ribbon, right? Ever since this big candlestick to the downside on the 17th of August, all we've done here is consolidate. We had a little crazy candle here and crazy candle back to the downside, but we just consolidated here sideways, and you can see the EMA ribbon expanding, becoming more bearish, trying its best to push us towards 25 and 24,000 are the bears. Now, if we switch on over to the traditional markets, they're also struggling, tumbling for a full day. Now, we know why this started, right? This is led by the dollar index rising. There is a flock to safety right now. People are now concerned that there will be more rate hikes this year. Yes, that is what's going on. Remember, markets still pricing a pause at the next FOMC meeting, which is 12 days away, September the 20th. But what they have done is they've started to now price in that there could be a rate hike at the next meeting on November the 1st. So that meeting, there's a 44% market is pricing in that we will get another 25 basis points. If you come on down to December, you've got a little bit of the market pricing in another rate hike. So the market generally is pricing in 1, maybe even 2 rate hikes here to finish out the year, when previously they were thinking we could have been done. We could have stayed at these levels until the end of the year. That is leading risk to rotate off. That is leading this dollar index, which I've been shouting and harping on about for a very long time here, to not only remain above its EMA ribbon, but really be on a powerful tear again. Look at how its EMA ribbon flipped. Look at how it's extending and setting itself up for a big move. If I notch this up to the weekly, you will see exactly the scary thing that's going on now. This is now its 4th week above the weekly EMA ribbon. You can see the EMA ribbon starting to get ready for a flippening, which normally sets itself up for a big move to the upside. You can see that historically here, when it's managed to do that, it's gone on an absolute 10. If this does do that, it could spell a painful period for Bitcoin. Because the reality is, Bitcoin right now is a play not on inflation, is a play not on a spot ETF, not on even the Bitcoin halving. It's a pure play on money being printed into the system. And that's one thing we have to understand right now, is that is what the focus is. If I show you this, you will see in this article here, it speaks very clearly about the cycles we've seen in the past. And if you watch these cycles, look at that. In 2011, you saw a big move here, 1,400%, followed by 180% the year after, 5,500% the year after, and then a big down year every 4 years. And we've seen that play out, right? 2018, and now, of course, 2022, we saw 65% down. So what people are now saying is you need to start seeing these central banks, which we've been talking about for ages, right? We need to see the central banks become our friends again. We spoke about Jerome Powell not being our friends, right? He's not loosening policy. He's not even pausing policy. He's still planning to increase rate hikes. Until they're our friends, until they increase M2 money supply, which is what you're looking at here, we're not going to see a powerful move on Bitcoin. Because historically, every post-halving bull run was characterized, like you see here, by a 6% or higher aggregate M2 money supply growth. So we need to see that M2 money supply growth grow, not just in the US, but all the major central banks, right? Japan, in China, in Europe as well. We need to see them not tightening policy, but loosening policy. And until we can have a roadmap for that happening, until we can see when is that starting to be the plan, expect more pain on Bitcoin, expect more sideways action. Now, during this sideways action, you guys know what my game plan is, right? I'm looking to accumulate. And in yesterday's video, I broke down for you the top 5 altcoins plus a couple of bonuses, which I'm looking to DCA right now. Those are the coins I'm looking to add right now in this market. So definitely go watch that video. I definitely think you'll enjoy it. Also, if you want to learn TA, ijaz.uk/TA supports the channel. You guys get to learn TA in a structured curriculum, and you definitely won't regret signing up to that. So definitely check that out. Links in the description. The only TA education program I'll ever be offering, and I'll continually add to it without increasing the price for you guys that have locked it in today. So definitely go check that out. So jumping back onto Bitcoin, what are the key levels? Have anything changed? Well, the reality is the same thing continues to play out. I still want to look out for 25,000, and I still want to look out for 24,000. If I show you this on my other chart, which is this chart, I'm scared about the M pattern, right? Remember this M pattern here? Up, down, that's a reversal pattern. And that brings you down to these ugly price points at 18.7, still in play. I know it sounds horrible, but it's still in play. The other way I've been showing this to you guys is this pattern here. I zoomed out to the daily. You guys know we're in this channel, and this channel, the first pivot point is 24.8, which so far up until now we've managed to avoid. And then the next pivot point leading to this one here, which I'm circling, is coming back to 19,900. Those price points continue to be in place. I'm not going to be shocked if those want to play. Now, currently, I don't want to time this market. Loads of people saying, oh, if you think it's going to fall down to 20,000, why wouldn't you jump out and jump back in? No, that is what continually gets people wrecked. I do not try to time this market. Even though the TA could suggest we could be heading lower, I want to be locked in the market, right? Studies have shown if you try to miss a couple of the key days in the crypto market, or the S&P as well, by the way, this study has been done on the S&P and the NASDAQ as well, you miss out on an outsized amount of gains. You want to be in the market. You don't know when the market's going to pump, and you don't know which days are going to be the powerful days in the market. So I'm locked and loaded, ready in the market. What I have done is kept 10 to 12% or so cash remaining on the sidelines to buy the dip a little bit, 24.8. And of course, if we head down to that 20,000, I'll be nibbling much more significant at these levels. It's also worth noting the price point at the bottom of the channel, the 16,400, 16,500 range can still come into play because that's the top price target all the way to the bottom of this channel. So there you have it, guys. Difficult time in the market as it has been for a while. But either you're going to put in the work or you're going to make excuses. Either right now in this bear market, if you're involved in crypto, you're in a lucky position where you have access to crypto in a bear market when prices are retraced. There are going to be tourists that come in when Bitcoin's back at all-time highs, when Bitcoin's higher than all-time highs, and they've got a completely different game plan to what we're trying to do here. Hope you guys enjoyed this video. If you appreciate this type of content, you're definitely going to enjoy this video here, and I'll see you in the next one.